Hello, you're watching Dukascopy TV. US dollar strength, simply a correction or part of something more? Jean-François Owczarczak of MJT joins us in the studio now. Jean-François, thank you very much. Great to see you.
Hi Natalie, thanks for having me back.
Okay, so talk us through. We've got some of the crosses here. What are we seeing on some of the majors?
Okay, well, we're back with our Dukascopy portfolio, and basically we have a euro dollar here, cable, Australian dollar, gold, US dollar Swiss, US dollar yen, and we've taken from our own database the 3 months S&P future and the 30-year Treasury bonds future. And I'm probably going to start with the euro and basically put an investor's view here. Investor's view looks at a weekly, a daily, and an hourly at the same time. You can see the summary chart here, which basically depicts how long the weekly lasts in terms of time frame, and then puts it into the perspective of the daily, which is the number 2 box here, and the hourly, which is the number 3 box, and basically just shows us the small perspective of the hourly in respect to the long-term weekly. Sorry. Now, at first instance, when you look at this, we could see that the weekly is in a bull, the daily is in a bull, and the hourly is in a bull, and so everything looks well positioned for the euro. We'll caveat that a little bit, and we'll look at the weekly here and see that, well, we're still quite close to the base. We're moving up. There's still some potential to the upside. It's still quite aggressively far away, and I think we should still consider this as a base and needs more to be confirmed. Now, if we look at the daily, it's still in an uptrend, although it had quite a nice correction over the last few weeks. In this respect, it should have more power to move up into the 138, 140 level. But it did see quite a lot of exaggeration, and let's click on it here with the oscillator, which was in the overbought zone, and which with the two envelopes touching each other here about 3 weeks ago. This correction down has not been strong enough now to turn the trend, and so we'd still see it as a move which is still to the upside. Now, there was a correction that happened, and we can see it here on the hourly. Now, is this move over? Are we moving back in a resume uptrend mode on the euro? We'd really need to make it back above the corrective targets here, which are around 136. And so as long as we stay within this corrective targets here, we would believe that this moves down is still, or could still be in place. And so to reinstate the uptrend on the euro, this 136 mark is very important, it's crucial. Now, we could probably get a more positive spin on it if you look at the sterling or the cable, because basically, well, we're still in a very much of a sideways movement over the long term, but the daily is showing a similar uptrend than we see on the euro, although there was also quite a lot of exaggeration here, and hence the consolidation that we've just seen. And the hourly has already reinstated a resume uptrend in an impulsive move, if you see here. So if we believe what we see on cable, it would mean that the correction up on the dollar, the correction down on the euro, the correction down on cable could be over.
How do you see this pair as being weighted? Is it on the pound side or the US dollar side?
Well, it's quite similar as what we see on the euro. If we look at the two charts together here next to each other, they're still very much in sync. And so in that respect, I actually use one to confirm the other one here. So I'd say they're very much correlated still. Now, I cannot say the same about the Australian dollar here. And basically what's happening here is that we could see that the Australian dollar is much closer in correlation with gold and in general commodities.
Seeing very much a downward slope there, aren't we?
As with gold. And 2 weeks ago when I was here, I was saying that there was crucial resistance here around our corrective targets on the daily. Now, if we click on it quickly, you could look here. We had corrective targets around the 97.40 and said that there would probably be a lot of resistance at this level. Well, it's been moving down again. And if you look here, the hourly is still in a downtrend and hasn't even initiated a correction up. You could see it a bit in the prices, but our trend indicator hasn't changed yet. So if we look at the commodity space, well, it's still moving lower. And if we focus on gold, we could see that we're still in a long-term downtrend, and we've been signifying this downtrend since almost the beginning of the year.
You've been negative on gold for quite some time.
Yeah, true. And we did see the intermediate bottom at the end of June quite nicely, labeled it as a correction up. And also here we had a corrective target around the 1440, I think, which we never were able to take out. And so we still confirms this long-term move down. And as you see, the weekly is still down, the daily is still down, although we're getting to interesting levels here. And the hourly is still moving lower too, and over the next few weeks should have still some potential to move lower. So if we're a bit in a more neutral position over the short term on euro dollar and cable, where we might reinstate the uptrend if the hourly make it above the corrective targets, on Australian dollar and gold, we would still be negative at the moment. Now, if we look at dollar Swiss, it's pretty much the reverse here as what we have on euro dollar. More interesting is probably dollar yen. If you look at the chart here, it's still heading nicely up over the weekly, and the correction that we've had since now 2 quarters has been very, very flat. And so we still believe there is some potential up over the next few quarters on dollar yen, and I think the targets are around 110. And this long consolidation up has turned up again, and so we believe there is a chance that we could make it above this long triangle that we've been seeing for the last, I think, 5-6 months.
It's looking almost relatively range bound there.
Well, it's a triangle basically. It's always hard to call a breakout from a triangle before it actually happens. Now, most of them do happen in the direction of the trend, and so the trend on the weekly is still heading up, and so in this respect, we would probably anticipate that this move that we expect on the weekly should break out here on the daily. But usually in a triangle, you would wait till it happens to actually move into it. And so if you look at the hourly here, well, it's still moving up quite nicely. It hasn't seen the correction down that you've seen on over the last few days on euro dollar. It is getting to a bit overbought at the moment, so might see a bit of weakness here during the week. But in general, it seems like quite a constructive pattern over the medium term. Now let's focus on equity markets and on the S&P future. Well, it's been going up quite nicely. We were quite bullish on it all year. We did wonder if we were not going into a consolidation period, but it does seem like it's very, very strong here. Bit overbought at the moment, but we believe that over the next few quarters, there's still some potential here. So although our impulsive targets have already been met, we believe that impulsive 2 targets are probably going to be triggered. And so there's more to go there. Just shorter term, bit of overbought situation, and on the daily and on the hourly, so we might expect some consolidation. Now let's focus on our last item here, which is the 30-year Treasury bond future, and the tapering has initiated quite a strong correction, which started, I think, in the month of April or May. We never went impulsive, never through these corrective targets here, so it is labeled only at a correction for now. But it's probably not over, because you'd really need to initiate a strong uptrend on the daily to see bonds really get back into a bull trend. And so you'd really need to make it above 138 to reinitiate that trend, and at the moment it seems like we're rolling over again. So as with gold, we believe that there is more to go up on rates, and it's usually real rates, it's not inflation, so that has a negative impact on gold. So you see a bit of a nice correlation here between gold and rates, and we think the move is not over.
Jean-François, thank you very much.
Thank you.
To see whether Jean-François's forecasts match up with market movements, stay tuned to Dukascopy TV. Goodbye for now.